I'm just giving you, this is the introductory lesson. There's a lot of people out there pretending that they know what my Venom model is. And it's kind of weird, actually. It's like whenever I mention something like IMP24s in the past, there's this quick rush for scammers to run out there and pretend that they somehow got a secret lesson from me. Yeah. Or they went through some market making training session and they were trained in the same boot camp that I was. And it's crazy the level of lunacy that some of these people, promote. And people eat it up. It's crazy. But anything other than what I'm showing you here is not Venom. Okay, it's not Venom. They can use the names, they can talk like me and talk about it in hindsight and market replay. That is not what you're seeing here. Okay, I'm walking the walk after I talk the talk. I tell you what's going to be used in price action, and then it happens. So once that buy side's hit, the market starts to move lower and gravitate towards that low here. What makes that low so special? Remember, it's the lowest low in the 90-minute look back at 9:30. But the market needs to be predisposed to go one direction. If you're trying to use this model when it's in a middle of a trading range and it's had several large range candles up or down, Venom will not appear in that. It's not going to appear in that. The nature or the underlying premise behind this model is it's going to unseat those individuals that would otherwise be profitable. You have to have that in the context of why you would even be looking for this setup. Otherwise, it won't be there. And you're going to see people out there trying to look for these setups, and they're not going to be in there because they don't understand the underlying context of the marketplace. We'll continue and move on into more details. Now, here is the executions I used. This is going to be because I was going to show you this as the trade example for today and not mention or draw any attention to my Venom model. But Venom was the underlying premise as to the levels I gave. Okay, so you can see it's not market replay, but in fact, this is an execution done on demo because number one, I want to remind you that it's okay to do this in higher risk environments. In fact, I'm actually surprised to see my model deliver as well as it did today. I mean, this is learning experience for me. Seeing my tools and things being pressed in these high stress conditions where the market is extremely manipulated and has a great deal of volatility. And to see it delivering still like this is it's fabulous. I love it. So you can see that the entry right here, 18,991. It's inside of that gap right there. And I like the fact that it traded up there and fell short of the new day opening gap low. That's the signature I teach. If it can't touch that, is it weak? Yes, when the market should move lower. And that's why I felt confident when it was trading back down inside that. That's when I entered. Okay, so I do this a lot, and I've done it a lot back then when I was on baby pips. I would show examples. That's when I was really doing it a lot because I was really uncomfortable. I felt the Lord saying, we had an arrangement here. You learned it, you know it, but now you're at that point where you need to start sharing it like you said you would. So I was very reluctant to do that. So I would do a lot of things in the example I was showcasing back then and just trying to get comfortable doing something that I didn't feel comfortable doing. Because let's be honest, okay? I mean, you could just look at the sentiment of the community on X and everyone everywhere else that sees what we're doing. And the common consensus is this should be illegal. Like, no one should know this, right? And this is what I meant when I said, the inner circle. When you learn these types of things, you're viewing the marketplace through a lens that, until I started teaching it, nobody was really thinking about it like this. You can call it whatever you want to call it. You can say it's rebranded this and rebranded that, and that's all lies. That's all lies. Because if that stuff delivered what I'm showing you here, there would be people doing it. But what are they doing? They're using buy-side imbalance, sell-side inefficiencies. They're using sell-side imbalance, buy-side inefficiencies, BISIs, SIBIs, order blocks, fair value gaps, new week opening gaps, new day opening gaps, the 30-minute opening range. That's the real one. That's the algorithmic one. Consequent encroachments of the wicks. These are all things that never was made any attention anywhere else. I don't want to turn this into a commercial, but I really want you to think about what you've been seeing me do this year. Think about the sheer probability of someone getting it right this many times, this frequent, this precise, with the logic that I've already taught. Repeating over and over and over. I'm not reinventing the wheel, not producing something that's new and outside the language I've created. I'm just giving you more examples of how you can formulate a model. Now, if you strip away the essential core elements to what Venom is, I've taught it already. But how it's put together in a model where it repeats with a underlying premise. Why should it do this? Versus, I'm going to look at a down closed candle and call it an order block, and when it touches it, I'm going to buy it. That's someone that has learned from dollar menu mentors that have never really learned what it is I teach. They just learn the language, the buzzwords, because it sounds like they're intelligent. But if they don't show you that they can do it beforehand, explain it, and then trade it, they don't know what they're talking about. And that's why you're going to see them show examples of market replay. As soon as someone's putting market replay on there, that's the person you don't follow. You don't learn from someone that's doing that. I mean that sincerely. And if someone's doing it, let it be an encouragement to you to do better, to not require that crutch, because that's exactly what that is. A person that knows what they're doing, they're not going to teach with the market replay. They're going to teach with real live price delivery. No safety net. You put your opinion out there ahead of the marketplace. This is what it should do. This is what I believe it will do. And this is how I'm going to engage it. And then show it. Show it. And if they're not willing to do that, then they don't know what they're talking about. I don't care how many ICT buzzwords they have in their vocabulary, their video titles, and whatever they want to plaster all over their charts. There's so many people out there pretending to be ICT or SMC traders, and they're just frauds. They have no idea what they're doing, and they're rooking people, or they're not even calling it by my vocabulary, and they're reinventing it and pretending that they discovered it somehow. And they still won't trade live. They still won't show you beforehand what is going to happen, because it will unravel in front of everyone. The illusion. So everyone that's ever posted prior to April 3rd, 2025, any mention or supposed Venom model, they are grade A bull spit. Yes, you thought I was going to say a bad word, didn't you? The idea of imitation, I don't see it as flattering. I think it's disgusting, because really what you're trying to do is you're trying to put yourself out there in front of the real McCoy and get some kind of notoriety when none is owed to you, because you don't know what you're talking about. So anyway, I use this fair value gap here with the pretense of everything I outlined with the Venom model. The market breaks lower from there, zero drawdown on the entry, and then we have this inefficiency in here, and the market trades up into that. Notice this big candle right here. See that? All the way up to the volume of bounce. See that little separation between the bodies? That open of that candle's higher than that close. So that means you have to incorporate that as well. So this is the buy side of balance, sell side of efficiency. And if we're bearish and we trade down below it, what does that make it? An inversion fair value gap. And because of that, and we were trading above the opening price. See that? Above the opening price. Power 3. Okay. some garbage candle range theory, okay, Timu version. This is how you're entering with smart money, algorithmically. The fact that we traded up above that opening price and inside this inefficiency, well, let's do this. You can see the gap, inversion fair value gap, and my entry here. And then it breaks down aggressively. And I highlighted this one. It's a gap as well, but I already had a rectangle over top of what I was showcasing. And it breaks lower, trades back up into, fails to get the consequent encroachment of this inversion fair value gap, which is weakness, and we trade down below the electronic trading hours, which is pre-market hours sell side liquidity. And there's the limit order getting filled there, and then me doing the manual exit where I did not let my limit order, which was